We've completed our second section of how unemployment insurance is funded. The name of this session is Employers Take Charge, and that is exactly what these 10 steps are designed to do, to empower employers to take control of the process and be prepared with documentation if needed at a later date. It is no secret that the cost of turnover is high. If you follow these 10 steps, you can lower those expenses. So let's go through them. 1. Screen candidates carefully. Don't hire the wrong person for the position just because there's an opening. Don't hire out of desperation because you'll only regret it later. It is best to wait for the right candidate. 2. Sign on the dotted line. Make sure the applicant has signed the application, orientation papers, and acknowledged receiving the company rules and policies. Get this done at the time of hire or at completion of orientation. Be sure to get those signatures, and later you'll be glad you did. 3. Report any new hire or rehire online to the State Directory of New Hires. We're going to talk about this more in a few slides, but this is a key step to lowering separation costs. The State Directory of New Hires is important for the employer and a key way that the Louisiana Workforce Commission and employers can work together to combat fraud. Everyone is negatively impacted by fraudulent unemployment claims, and the State Directory of New Hires is one method to help combat fraud. Remember that improper payments to former employees can increase your unemployment insurance tax rate. Also, it can impact the Unemployment Insurance Trust Fund, which could increase unemployment insurance taxes for all employers. So please remember to register all new hires and rehires online with the State Directory of New Hires. 4. Write it down. Give all reprimands in writing. Include the date, reason for the warning, and get the employee to sign off. This is part of the paper trail that is important for later steps. 5. Discharge the employee if needed. If you've screened carefully but discover the employee cannot ultimately meet the job criteria, you may have to discharge them. If you have all your documentation in the personnel file, then the discharge may be needed. 6. Exit interview. Conduct an exit interview to document the exact cause of the separation. Prepare a statement of the facts for the permanent record. And get a signature when possible. 7. Submit the separation notice, also known as the Form 77, within 72 hours of any separation. The supervisor with first-hand information should provide the details. 8. Claim responses. Answer all notices of claim filed and notices to base period employers promptly. Give complete details of all reasons for separation, including a detailed description of the final incident. 9. Provide documentation of all violations of company policies. If the employee was discharged for violation of company policy, include the policy with the signed copy that the individual acknowledged receiving. 10. Review benefit charges quarterly. Check your statement of unemployment insurance benefit charges and report anything you think may be incorrect. Fraud can occur when an employee is rehired and continues to draw unemployment while working. Reviewing this statement can help combat this. Let's talk about reporting new hires. Federal and Louisiana state law requires employers to report newly hired and rehired employees in Louisiana to the Louisiana Directory of New Hires within 20 days of hire. The date of hire is considered to be the first day services are performed for wages by an individual. All new employees, rehired or recalled employees, and temporary employees must be reported. There is a $25 penalty per employee who is not reported, or up to $500 for collusion between the employee and the employer. A direct result of reporting new hires and rehires is the reduction and prevention of fraudulent unemployment and workers' compensation payments. When the Louisiana Workforce Commission receives new hire data, it can cross-match this data against its active unemployment claimant files and stop and/or recover erroneous payments. This also protects the integrity of the Unemployment Insurance Trust Fund and, in turn, can help prevent unemployment taxes from going up for all employers. Unfortunately, some employers mistakenly think that if they send a 1099 to someone, that means that they are an independent contractor and not an employee. It's a bit more complicated than that. So let's go through these checklists, which help differentiate between someone in your employ versus an independent contractor. Someone is an employee if they work on your premises, you provide the supplies, equipment, and tools they need, you have trained them for the position, they use your company name when working, they do not have their own business address, or phone number. The person is supervised by a company representative. To the general public, they are presented as your employee. They cannot compete with your business and do not work with other companies offering their services. They have no separate liability insurance. They are paid an ongoing wage versus by project or individual job. And they are required or encouraged to keep regular work hours. Someone is an independent contractor if there's a written contract or agreement with a specific amount paid and set deadlines. They have their own place of business separate from yours. They have their own equipment and supplies. They pay for their own expenses, licensing, and permits. They work for other companies. They are paid a lump sum or contract rate. And they market their services to other entities. Let's talk about some separation issues you may encounter. A quit or voluntary leaving. In this situation, the burden of proof is on the claimant to prove that the separation was due to substantial changes made to the employment agreement by the employer. Here's a useful tip. Don't turn a quit into a discharge. If an employee resigns with notice and the employer does not let them work until the end of that notice, it becomes a discharge. If you no longer want the employee to remain at the workplace, then pay them through the end of the notice and allow them to leave. Another separation issue that you will run across is a discharge. In the case of a discharge, burden of proof is on the employer to prove the discharge was for misconduct connected with employment. Let's take a look at the tip. An employer may discharge an employee for any reason or no reason at all, as long as it's not discriminatory. However, to disqualify them from unemployment insurance benefits, the separation must be for misconduct as defined by unemployment insurance law. So, we mentioned misconduct. Misconduct is the mismanagement of a position of employment by action or inaction, neglect that places the lives or property of others in jeopardy, dishonesty, wrongdoing, violation of a law or company policy that ensures orderly work or the safety of others. Misconduct can also be construed as the on or off the job use of non-prescription controlled substances. Since we've discussed misconduct, let's talk about aggravated misconduct. If the misconduct has impaired the rights, damaged or misappropriated the property of, or damaged the reputation of the employer, the separation could be considered under the aggravated misconduct provisions of the law. If proven, the employer may receive a non-charge. Base period wage credits earned by the claimant with this employer will be removed and not used to establish monetary eligibility for benefits. Defending against absenteeism claims, how documentation protects employers. Employees who are excessively absent can cause a drain on your company and its resources. According to the law, an employer may discharge an employee for excessive absences. However, there is no misconduct if the absences were for valid reasons, beyond the control of the employee, and with proper notice. Also, under Louisiana case law, a violation of your company's policy or rule does not necessarily constitute misconduct. So, to ensure you have the needed backup to defend against an unemployment insurance claim, follow these guidelines. Absenteeism and tardiness policy. Create a policy that outlines absenteeism and tardiness, which employees must read and sign when hired. Decide if you will require a doctor's excuse for medical absences and include answers to questions such as: how much advance notice should be given? To whom should the notice be given? Is it appropriate to leave a message? And who does the employee contact if the supervisor is unavailable? Valid absences. There are valid reasons for an employee to be absent, so make sure you do not use Family and Medical Leave Act covered absences as a basis for any disciplinary action or in the calculation of chargeable and non-chargeable absences. Keep in mind that though your company may utilize a point or no-fault system, Louisiana law will not disqualify an unemployment insurance claim if the final absence was for a valid, documented reason. Document, document, document. When in doubt, get it in writing. All documentation, signed policies, evidence, witness statements, and more will be needed during the appeals process. So you should fully document attendance and hours worked and not delay termination if the personnel file contains all the necessary documentation. Let's talk about appeals. Once a decision has been made, you have the right to file an appeal. First level appeals must be filed within 15 days. A hearing is held, and this is the only opportunity you have to enter evidence. Let's take a moment to highlight that the first level of the appeals process is the time that the employer can enter evidence. If you remember from the 10 steps for lowering separation costs, several steps can help you in this process. The 10 steps outlined all of the documentation that is needed. The earlier responses to the notices of claim filed and the notices to base period employers gave you an opportunity to detail the reasons for the separation, including the detailed description of the final incident. Now is the time you can pull from all of the documentation. If the employee signed off on your policies and procedures, then violated your policy, now would be the time to produce that paperwork. If you gave reprimands in writing, here is your chance to produce them. Remember that in a discharge, the burden of proof is on the employer. The second level involves the Board of Review. Must also be filed within 15 days. There is a review of the documented evidence, the review of the transcript from the hearing, and the decision may take 30 to 60 days. The third level involves district court. Must also be filed within 15 days. And at this stage, they will argue the correctness of the prior decision. You may continue to appeal as high as the U.S. Supreme Court. We covered quite a bit in this section on best practices. Let's make sure you're ready for your quiz question. Let's recap. Employers can take charge when it comes to lowering separation costs. They can do that by carefully screening candidates, having employees sign off on all important paperwork, documenting everything, and conducting an exit interview. Other key ways employers can take charge is by registering all new hires and rehires with the Louisiana Directory of New Hires, by submitting a separation notice, or Form 77, and reviewing their benefit charge statements. Remember, it's the law for employers to report newly hired and rehired employees in our state to the Louisiana Directory of New Hires within 20 days of hire. Also, we covered separation issues in our best practices. For a quit or voluntary leave, the burden of proof is on the claimant. But for a discharge, the burden of proof is on the employer. So remember to follow the 10 steps. Employers can appeal UI claims made against them. And during the first level of the appeal, the employer can enter their evidence. So let's get ready for the next quiz question. Here you go.